Hello and welcome to today's 10 at 10, which is of course available for everyone. So earlier on this week, we've looked at some of the ledgers. So we start off with the basically what ledgers are, and then we moved on to the sales and purchase ledger. And today we're going to be covering the nominal ledger. Now, particular nominal ledgers are basic transactions which don't relate to an invoice or a purchase. They may arise from credit card statements, bank statements, or even your cash book. And the unusual part about nominal codes is actually some items might impact P&L and others might impact the balance sheet, but also they might impact both at the same time. So that's the really key part. Basically, these are direct spends, direct receipts with no underlying bill, no underlying invoice. So items such as bank fees, taxes, loan repayments, and of course loan receipts, just to name a few. There's many, but just to name a few. And actually, this out of all the ledgers is usually the one that can cause quite a bit of confusion. They can often be misallocated if misunderstood, and some of the examples of how they can be misallocated is they could just be posted with the wrong account code, they could be posted with the wrong VAT rate, or they could be posted to the complete wrong contact record, which creates duplicates and it makes your loan liabilities like they're not being paid down in the way they should. So what I will say when looking at the nominal ledger is before you start and you have a transaction in front of you, which you know isn't a sale and know isn't a purchase, make sure you know exactly what the transaction is actually in relation to. So is it for a loan? Is it a fee? Has the receipt just been lost outright? Or is the transaction fraudulent? Or is there some sort of query that you're not quite sure of? If you have a query, raise it before dealing with it. Don't just post it and remove it. Out of sight, out of mind is not necessarily the right thing here, because once it's out of sight, it is very much out of mind. And if it's posted wrong, you can't find it as easily. So generally speaking, most nominal ledger postings are the leftover items once your purchase ledger and your sales ledger has been fully reconciled and up to date. This is, of course, assuming you use the double entry accounting convention and you're using the accrual-based accounting approach rather than just obviously direct posting, in which case your nominal ledger basically becomes every ledger. So that's how that works. Now I'm going to start off with some of the items which I'm going to classify as simple nominals. So these are ones which impact either your P&L in isolation or your balance sheet in isolation from a posting perspective. So a classic example of a profit and loss item would be, say, bank fees. Whenever posting these, depending on what system you use, you might be using Xero, you might be using QuickBooks, you might be using any system whatsoever. The one thing I will say is if it asks you for contact records, account details, and tax rates, contact you can always use your bank name. If it's obviously a bank fee in this example, don't call them bank fees, anything like that in the contact name. It just gets confusing. Just call them whatever banking provider you use. The account code can just be bank fees, and the tax rate would always be no VAT. Another example of items you might receive from your bank are, say, interest. Now, you might receive these or you might pay these out. Contact, once again, can still be your bank. Use their name in the contact record. Now, the account code here might be slightly different to before. It might be interest received, if, of course, it's money in, or it might be interest paid, if it's money out. But once again, the tax rate is no VAT. There's not going to be any VAT due on these payments. And now let's look at a little example of balance sheet item, which is, say, a corporation tax payment, VAT, PAYE, classic example of tax payments. Use the contact record as HMRC, if, of course, you are paying HMRC. Don't need to duplicate records here. It can be very confusing. Account code can simply be VAT, PAYE, or corporation tax payable. Remember, these are going to be paying down a liability in your balance sheet. They're not going to impact your profit and loss at all. And most importantly, tax rate is no VAT. Now, with the transactions I've just mentioned, there will never be an invoice or a receipt. And most importantly, there will also never be VAT on these transactions. Even when you're paying VAT, there's no VAT on it. You're just paying down a liability. So make sure you're not applying VAT. Now, what I will say here is when posting nominals, bank rules can be a real treat for these types of transactions. They save time, they reduce the chances of error, and it makes it a little bit simpler when reconciling your bank accounts. Now, This is some of the simple nominals we might have encountered, but actually there's other nominals which are what I'm going to classify as a bit more complex. So these will be transactions which impact both your P&L and your balance sheet at the same time from a posting perspective. Now, what I'm going to use here as an example is a loan repayment. These are classic examples. They always catch people out. We do see it quite often because actually what you might find is when repaying a loan, the transaction, you'll have one transaction sitting in your bank account, but it might involve capital and interest in the repayment element. So actually what you have is two transactions merged into one. Now, before posting these, the one thing I will say is chart of accounts are really important here. So if you have multiple loans, I would recommend setting up a balance sheet liability code for each corresponding loan. So you can use the lender's name within the actual loan agreement in the account code name. And you might even want to split out the interest as well, depending, of course, what sort of level of detail you want in your management accounts. So I recommend having a look at your chart of accounts before moving on to these. And then when it actually comes to post the transaction, check the loan documents, check the agreements, check the statements. And if you've received cash in, things to look for are whether they've deducted the fees at source. If you're expecting £5,000 worth of capital, but they've only paid you £4,500, chances are they've probably deducted a £500 fee right at the start. So if you just posted that all to your liability account code straight away from the off, you're missing £500 worth of cost. And of course, you're missing £500 worth of liability. Likewise, with cash out, whenever you make a payment, always try and look at whether interest has physically been charged on the transaction. Now, chances are what you find is that a lot of loan repayments are a very specific number. Generally speaking, when they're a specific number, there's almost certainly going to be interest involved. If it's a flat repayment, it's a little bit more subtle, but do remember there may also be interest involved. So check these details. Then, when physically posting the transaction, whether you use Xero, whether you use QuickBooks, whether you use Excel, whatever system you use, remember it's going to have two parts to the transaction. So part one is going to be the capital repayment. Part two is going to be the interest. And when we're physically posting the transaction, if it asks you for your contact name, simply use the name of the lender. When it asks you for the account code for the capital code, you can use that loan account you've made in your liabilities chart of accounts. And likewise, when it asks you for the account code for your interest repayment, if you did make a new cost account code for your interest paid for that unique lender, you can use that here. But neither transaction will have any VAT, so no VAT on these transactions, unless on the interest it specifies in the documentation. Chances are there usually isn't any VAT, but there are the odd occasions where they might apply, say, an annual fee, might be £35 plus VAT. Just keep an eye out for those ones, but just remember that the interest elements, no VAT in general. So depending on how the payments vary, bank rules might not be the most suitable means of posting these because obviously we've got a variable element potentially in the interest. And if you have any bounce payments, they might also apply a late payment fee. So it can often cause a little bit of a headache if you've got bank rules set up because you have to be really specific with what you want it to do. So unless you fully utilize the function in a really specific way, it can be quite hard to use bank rules. Can be done, but not always the easiest option. So what I will say is if you're unsure on how to post these at any point in time, don't just post them. Keep them in your awaiting reconciliation tabs until you have more information. Because we often see clients who post the full element of the capital of the transaction to pay off the capital, aka the loan liability, by mistake. And the problem with this is that you end up with costs in the P&L which are understated, and the remaining balance in the balance sheet actually reduces too quickly. And what we often find is that if it's all posted to capital, it's often I'm going to use the word, it's often forgotten about because primarily a lot of clients that we know, I think it's just the entrepreneur habit, we tend to look at the P&L more frequently than we look at the balance sheet. And chances are it literally ends up sort of out of sight, out of mind. So this is why right at the start of this part, I mentioned it's useful to sometimes have a unique cost code in your account code for each loan, because if you are posting them correctly and then you just miss it one month, you accidentally post it to all to capital just by mistake. It happens, we all do it. It does mean that when you look at your P&L, you'll see interest on this loan, and you'll see all of a sudden it's drop, nothing. That's when you know you've posted it, or you're missing a payment, it's bounced or anything. That's a really good flag. So that's why I recommend having that, because it stands out like a sore thumb when it is missed or misallocated. Now, another nominal we might encounter quite frequently is that of directors' loans. So these ones I'm going to use as an example of a complex one, because they can be either an asset or they can be a liability. Now, whenever we see a director transaction where it's, say, them paying for a personal spend by the business, or they're physically taking cash out, or they're introducing cash in, always use the contact name as the director in question, because especially if you have multiple directors in the business, really key to see exactly who's taking the cash and when. Makes it really easy to reconcile later on towards the year end. And with the account code, I recommend having a unique director's loan account for any directors involved, and physically putting their name or at least their initials in the reference on the account code, so you know exactly who it belongs to. Now, any director transactions will, of course, have no VAT on them. So the tax rate will always be no VAT. Even if the director is paying for a personal expense and using the business, even if they have a receipt, even if they have an invoice for that expense, it's personal, it's not a business expense. There's still no VAT on the whole transaction. So always want to look out for director personal expenses, no VAT. They cannot claim the VAT back, and it's not a cost to the business. So directors' loan accounts in general are going to be classified as what I say, complex, because the underlying result of the director's loan account position at the end of the financial year is a completely different beastie in its own right. So that's a complete separate topic going on to director's loan accounts. But of course, we do have information on that as well, but not in today's topic because that's completely separate. So the one thing I will say with nominals is make sure you know exactly what you're looking for. Make sure you know exactly what it is. And of course, don't be afraid to leave it unreconciled for just that little bit longer until you work out exactly what it's for. It can be very easy to tick and bash these without thinking about them necessarily, but always have a look, think about the underlying transaction and work out what you're trying to achieve, whether you're paying off a liability in the balance sheet, whether you're incurring costs in the P&L. Always just consider some of these things. Now, if you're a member of the BBB Club, we do have content online for you to review in light of this. And of course, we also have checklists and little cheat sheets as well, just to help you along. If you're not a member of BBB, please, of course, you are available to join. We're happy to have you on board. And we are willing to share lots of little content, a lot of little cheat sheets and stuff to help you through. And if you are not a member just in general, you can also join us on these 10 at 10s every day. So I hope you found this one today useful. We will be covering some more of our ledgers throughout this week. And towards the end of this week, we're going to look at some of the common, I'm going to say they're not errors. Well, yeah, I suppose they kind of are. Common errors, common queries, common confusions that arise from, say, account codes and stuff, which often throw people a little bit off skew. So I hope you found this useful, and I hope to see you again tomorrow. Take care, guys. Bye.